Hi guys, so today we're going to look at some trending UK shares, which means shares that have received multiple analyst ratings in the last few days. Two of these shares have a strong buy rating and one of them has a moderate buy rating, and all three of them have a potential double-digit upside. So let's start with the Compass Group, ticker symbol CPG. So the Compass Group is a British multinational contract food service company. It's the largest contract food service company in the world, employing over 500,000 people. It serves meals and locations including offices and factories, schools, universities, hospitals, major sports and cultural venues, mining camps, correctional facilities, and offshore oil platforms. They are listed on the London Stock Exchange and are a constituent of the FTSE 100. They are also a Fortune Global 500 company, and they were founded 80 years ago. Now, funnily enough, I actually work for the Compass Group part-time. So one of my 0 hours contract jobs is with the Compass Group and I absolutely love it. I work part-time as a restaurant supervisor and a bar supervisor sometimes as well. As the Wikipedia article showed, they do actually operate in so many different sectors. I actually work for an events venue, so concerts and things like that, but they do serve multiple venues, so all about those diversified streams of income. So let's have a look at what the analysts are saying. So as I said, this is a strong buy rating here, with 9 out of 10 of the analysts saying it's a buy and 1 saying it's a hold. Now, as you can see here, the low price target is still above what the current price is. But the average upside here is 15.8%. And if we have a look at the ratings down here, you can see here that it ranges from a 6.9% upside, which is one of the lowest price targets, to as far as 31.4% upside. And that was only released 9 days ago. Now, if we have a look at the stock analysis, we can see here that actually the smart score here is 7, which is almost at the 8, 9, 10. And don't forget, the smart score takes into account loads of different factors, which could be skewed partially by the fact that during the lockdowns, food and hospitality has suffered. But everything is bouncing back at the moment. You can see here, obviously, in the last 12 months, their return on equity and asset growth and everything is negative. Like I said, take into consideration the situation that we've been in. Now, if we look at the stock chart, we can see here that they are far, far below where they were before March of 2020. So we can see that big drop here in March when everything happened, and they are about midway through where they were previously. And prior to that, we can see that they were growing consistently, sort of plodding along for a while. But over time, just as stock markets go, they were on the upwards trend. So if we have a look at the news now, we can see here that a lot of them seem quite positive, with things like catering giant Compass gets a boost from sporting events and kids back at school, but doubts about the pace of the return to the office cloud prospects. And a lot of things about sports crowd boosts and things like that. So generally, mostly gearing towards the positives here. Now, the next stock on the list is a surprising one-ish, but it's Royal Dutch Shell, ticker symbol RDSA. So Royal Dutch Shell, commonly known as Shell, is a multinational oil and gas company headquartered in The Hague. It is incorporated in the UK as a public limited company and of course is one of the oil and gas supermajors, and measured by 2020 revenues, the 5th largest company in the world. The largest based in Europe and the largest not based in China or the US. They were founded 114 years ago, which is just mad. And of course, they are a constituent of the FTSE 100. In 2019, it had a market cap of 216 billion, by far the largest of any company listed on the London Stock Exchange. Now, it surprised me to see Royal Dutch Shell trending and being such a strong buy at the moment, because if you're not aware, the UK is majorly suffering at the moment with issues with oil and gas. Although the majority of our issues are stemming from lack of drivers rather than lack of petrol. So actually prices have gone up. But if we start with the news on this one, we can see here a lot of different things. As I said, Shell gas stations run out of fuel. That's just to do with panic buying. So people panic buying fuel because of the shortages. They are also due to invest a lot of money in Brazil's clean energy. They are one of the top 3 dividend stocks in energy, according to Motley Fool. And this one is interesting as well. Shell investors get surprise 7 billion payout on shale deal. So it does seem like there are so many positive news articles currently about Shell that are definitely worth reading. And don't forget, the link is down below if you want to know more. But let's have a look at the analysis. So Smart score of 9, so it is forecast to outperform the S&P 500, and literally everything here looks green. Even the insider activity here is to buy shares. So if we look at it here, buy, all of them are buy here in the last few days. So we had one for £4 million, we had 100k, we had 2.9 million. So a lot of the insiders buying shares. Now, if we have a look at the stock chart, again, not quite recovered from the March 2020 drop, but about halfway there. In terms of analyst ratings, we've got 13 here, and 11 out of the 13 have said it's a buy rating. But on here, the low price target is actually lower than the current price. Having said that, the average upside is 23.3%. If we have a look, none of these recent price targets are lower than the current one. It's only this HSBC one from 2 months ago that's quite low. And this one from 3 months ago, that's the downside. So if we disregard that one, we are looking at potentially really high upsides here. Look, we've got one for 43.8%, 40%, and then most of them in the 20s. So the final stock for today that is trending currently is Reckitt, ticker symbol RKT. Reckitt is a British multinational consumer goods company that is a producer of health, hygiene, and nutrition products. It was formed in 1999 by the merger of British company Reckitt and Coleman and Dutch company Benckiser. So actually, if we look at the history of those two, whilst the current version of the company is only 22 years old, the others are about 200 years old, which is absolutely crazy. Now, their brands include the antiseptic brand Dettol, which, considering the last 18 months, oh my god, everyone has been using so much Dettol. The sore throat medicine Strepsils, need I say more? The hair removal brand Veet, and the immune supplement Airborne, the indigestion remedy Gaviscon, etc., etc. So you can see here, like, you know, Durex, Lysol, Vanish, Clearasil, like, these are all massive, massive brands in the UK. I don't know if you have them in the US, but generally I use so many of those brands that I'm actually surprised that I don't invest in them. So what are the analysts saying on this one? So it's currently a moderate buy because 9 buy ratings and 4 hold ratings. But let's have a look at when those were issued. So it's all within the last 2 months, it seems. There's one from 3 months ago, but the majority are within the last 2 months, and then quite a few recent ones. Again, that's what they need to be trending. The current price is 5,800. So the lowest ratings of 5,400 and 5,700 are obviously a downside. But the majority of the others are so different. You know, you've got 45%, 36%, 62%, like some huge price targets there. But the average does seem to be that 23% again. So let's have a look at the stock analysis. So the lowest of the smart scores at a neutral 6. However, look at that insider activity here, 628,000 over the last 3 months, with quite a few of them quite recently. In terms of their stock chart, you can see here it's far less interesting than the other two. It does seem to go up and down quite a lot. And actually, they went up during 2020 as opposed to the others, which dropped. And since then, they have had a downwards spiral. So let's have a look if the news can shed a little bit more light as to why they are trending. So last month, there was an article called Bullish Insiders Bet 3.4 million on Reckitt Benckiser Group. So let's have a look at that one. Quite a few insiders have dramatically grown their holdings over the past 12 months. An insider's optimism about the company's prospects is a positive sign. Although they don't think shareholders should simply follow insider transactions, they do consider it foolish to ignore insider transactions altogether. So overall, over the last year, insiders have bought 56,000 shares worth 3.4 million. And they sold 10,000 shares for 648,000. But in total, they bought more than they sold. So you can see this chart here just outlines that. So huge difference. But you can see here also articles talking about how cleaning demand fades after everything goes back to normal. Sales slow because there's price warnings, etc. So obviously make sure you do your own research. Hopefully this has been a useful video. As always, I would love to know if you hold any of these shares or if you're going to look into any of them. I personally hold Compass Group and I will definitely be looking into the other two now. That's it for this video and I'll see you next time. Bye.